SharePrices.com.au studios, I'm CJ Dore, and in this series we're looking at how to get started in the market with your trading and investing. Now up to this point we've looked at some of the investment products where you can put your money to start trading, but let's look at some Forex education. We're talking about foreign exchange. What is it? Well, it simply is Forex, made up of those two words, foreign exchange, or abbreviated down further simply to FX, which is how it's quoted as well. So how exactly does it work? Well, it's all about currency. Now we've probably had an introduction to this on a very basic level if you've traveled overseas. Before you go to the foreign exchange office and cash in your Aussie dollars, you're looking at what it's worth. How much longer can you hold on? Is it going to go up or down? How much can I get for my money? The best deal for when I land, best bang for your buck so you've got the most to spend. That's foreign exchange in a very simple term. It's about buying and selling currencies against each other, and they are currency pairs. Some of those pairs are the Aussie dollar versus the US dollar, and we know that one, it's quoted quite a lot, or the Aussie dollar versus the NZD, the Kiwi dollar. Here's another one, Aussie dollar versus the Great British Pound, the pound sterling. So let's stick with the Aussie and the US dollar as a pair, and let's do a trade and see how it works. And it's going to be quoted how it's read there. One Aussie dollar equals, for example, on this occasion, 75 US cents. So let's move forward. Now you can either buy or sell. Now it doesn't mean buying like walking into the supermarket, you buy your groceries, or you sell something online and you part company with it. Buying and selling is about buying, expecting it and wanting it to go up from that 75 cent point. Or selling is expecting it and wanting it to go down from that entry point where you open a position at 75 cents. So let's move forward and have a trade. Now we're wanting and expecting it to go up on this occasion. So we're going to be buying. Now we enter it at 75 cents, and let's say it does go up and goes up to 77 cents, for example. There's some good profit. So let's do an equation, if you like, and explain in simple terms how it works and how you've made money. You've entered your position at 75 cents. You've got 75 cents in your hand. Someone comes along and says, I'll buy you 75 cents off you. Okay, how much for? 77 cents. Of course, good deal. There's profit. 2 cents, you'll take that. Now, you don't just buy $1 worth. When you trade currency, you're going to be trading with possibly larger amounts, and that's how it's made. And we'll get into that price movement again shortly. Now let's do another trade, and on this occasion, we're wanting and expecting it to go down from the entry point of 75 cents. So that is going to be a sell, or we're going to sell the currency. So we have seen it come down to 73 cents. So let's do another little real terms example. Now remember, it's anchored around the 75 point where we got in, but this time we've sold. So we've got the 73 cents in our hand. Someone comes along and says, I'll buy you 73 cents off you. Fine, how much for? 75 cents. Of course, there's profit. Good trade and good deal. But let's look further at how this actually works as far as the movement goes. It moves in what are called pips. So what is a pip? It's basically a measurement of movement when it comes to currency. And when you trade currency, you don't just buy at 75 and it goes up in cents, say to 76, 77, 78. It'll go up in tiny little increments. And it's quoted here. And here's our 75 cents, but it's quoted to 5 decimal places. So our 75 cents, if we break it down further, like minutes into seconds or seconds down into milliseconds, 75, the actual real figure, if you break it down to those decimal places, is 75,542. Now let's have a look, and it goes down, and here it's gone down by 1 pip to 5 decimal places. Look at that, 0.00001, and that's how currency is traded, and that's how you can get it in and out with little pips, little movements, little bits of profit. Now if you've got a lot of currency you're trading, 1 pip could equal a lot of money to you. But there's an example of how it's quoted, so it doesn't just go up in even round numbers or figures or cents worth, 75 to 76. So there's our equation. We got in, and our 75 cents is actually 75,542, went down by just 1 pip, and that could be profit if we sold. Remember, we're wanting and expecting it to go down, and it did. So our actual currency figure now for our 1 Aussie dollar, we've ended up with American 0.75541 cents. That is profit, even just 1 pip to 5 decimal places, and that's how the FX game and currency conversion works. So how to get started video series, this is one of our products, and it's all about Forex, foreign exchange, or simply FX. That is our FX education edition. Hope you enjoyed that. Maybe that's triggered some interest. Maybe you'd like to go ahead with that. If you do, get in touch if you'd like more information at info@shareprices.com.au. Forex could be the game for you for your investing or trading. As for now, I'm CJ Dore from the SharePrices.com.au studios.